Welcome to another episode of Ring the Bell Investing with the Masters of Marketocracy. Tonight, I'm joined by Dan Wyman and Glenn Brownworth as we kick off the new year and talk about the markets and some specific stocks. First, I want to congratulate our group of masters. There's 8 total for their combined performance in 2024 of their manager models. 46% returns in the manager models in 2024 as an aggregate group. Some were higher, some were lower. And for some investors, dividends and security are more important than returns. So it's not to say that everything is about returns, but a lot of people are looking for that growth. But that's why we have a lot of models to choose from at Marketocracy Masters, some of which are not intended to outperform the market. A lot of our house models are set up for those dividend investors, for security, for older folks, for international investing. So, but as a group, it was an outstanding performance exceeding that of the S&P. And for more details and to see specific investors' performances, visit our website at marketocracymasters.com, and you'll get all the details since inception, last year, and what have you for every individual investor. With that, the markets rallied yesterday wildly on the heels of a weaker than expected CPI in the morning and on a weaker than expected PPI report the day before. How do you guys feel about where the economy is headed right now? And how is a presidential transition going to affect that? Go ahead, Glenn. I see you're ready to jump in there.
Oh, man. I don't know. This is going to be an interesting year. I'll say that.
Well, go Lions. I should have said something when you say interesting year. I should have said something about why I have to sport my Lions jersey today, a couple days before the first big playoff game. So coming from the Detroit area, go Lions, and then talk about the interesting year.
Well, barring having a trade war with our 2 largest trading partners in the world, hopefully, our economy is actually a lot more stable and resilient to people tinkering with it than, I hope. So, I don't know. It's really hard to tell. I think certain industries are going to struggle this year, but, I think there's going to be the year of the battery, because I've been watching this Consumer Electronics Show, and there are batteries everywhere, and it's at a point now where you cannot deny that it works. So we have plenty of solar. We need a way of storing it. So who knows? It might be a transition year for this tech. And when it comes down to it, it always comes down to the money. If technology X costs this and technology Y costs that, whichever one is the best deal, that's really what works out. And that's why we have automobiles instead of riding horses today.
So you're kind of getting specific, Glenn, but in general, how do you think the economy is going to perform this year?
I would kind of say we're going to kind of trade sideways for a while, and we're going to see how the next guy is going to do. And I think the next 6 months are going to be a little bit of a holding pattern, and maybe in the summer, if things are stable, then I think maybe towards the end of the year we'll have a rally. But maybe wishful thinking. We'll see.
All right. That's one
Inflation
opinion.
is low.
I'm curious, Dan, what your take is on it.
Well, it looks like the economy's doing really well right now, but Glenn's kind of alluding to the uncertainty that we're facing with different policy shifts that are being proposed. Let's just say that if we put a 20% tariff on our biggest trading partners, then we're going to have 20% inflation, and all bets are off. But it's like people are trying to handicap what the next administration really means to do. And do we believe what they're telling us, or do we think it's a negotiating tactic? If you took them at their word, then yeah, it's going to be a disaster. So, not to get like political, but that's how the money flows, right? Yep. So we're just handicapping, those type of, plans or pronouncements. And yeah, we're facing a lot of uncertainty. Until that's resolved, I think it's tough to really, you know, have a plan or make a projection in the face of, that kind of policy uncertainty.
I think those are great points, Dan. And I'm just going to offer one other opinion because I think we might see a little bit of animal spirits come back into the market once Trump is in the market. You definitely bring up some great points, and there's a lot of unknowns. But hey, I was surprised at the election outcome overall. And given it though, I think that there's some animal spirits out there, and part of that, the reason I say that is because of all the business people that Trump is surrounding himself with that are going to work together, I believe, to help make sure we're doing the right thing for the economy and the markets, because everybody out there is interested in the markets and their own pocketbooks too, and it's going to be an interesting time, but I think we can see a nice little run shortly after, or maybe beginning with the inauguration. Maybe we do a sell in May and go away, but I think we can see a run up to then, and what happens from there is the net effect of what the final policies will probably be. I also look back to, when people start talking about inflation, everybody's nervous about inflation because of what we just went through with COVID. But boy, you look back into the 80s, and in 1980, inflation was at 13%, and it took 2 years to get it down to 7%. And we're worried right now, looking at it between 2 and 3%.
Yeah.
I think that's more like good growth right now.
Yeah,
So
absolutely.
If I may add something, what you're talking about right there, basic structural, how do you say it? They're basically structural pieces of the economy. And like we were talking before about how people don't understand how these things work, it's equivalent to trade balances. No balance is ever 50-50. We work with Mexico, we work with Canada. It's never 50-50. We buy a little more, we sell a little less. We sell a little more, we buy a little less. It's always like that. For example, 90% of our potash, which is a mineral we use for growing our food, comes from Canada. If we want to eat food, we need to buy it from Canada. Same thing with Mexico. I don't think there's anybody growing tomatoes in Michigan in the middle of January. So we get 90% of our tomatoes and avocados from Mexico. Everybody has something the other guy wants. And if this misunderstanding in the White House is that you can make it 50-50, then it doesn't work that way. The same thing with inflation. Average over a century is 4%. So 13% in the 80s. I think it was like 19% in 1978. It's perspective and context. If you could teach people that, put it in the context of where it was. And I know inflation sucks, but it's not anywhere as bad as it could be. And people always assume that it's the worst.
Great points, Glenn. And to your point, I just happened to catch actually the director, I forgot her exact title, but the person in charge of trade from Canada speaking about trade today on CNBC, and speaking about how, in her words, in the last few minutes we've been discussing this, $20 million have exchanged hands between Canada and the US. And it is a huge amount. So, and that's why it goes back to my point too, about there's a lot of smart business people that are going to be in this administration helping balance this out. And they realize that, they can't just all of a sudden flip a switch and make things 50-50.
Yep. Like up in Michigan where you are, they're finishing the Gordie Howe Bridge. We need more of that. It's like a giant hand across what river is that? And to basically say we're willing to do a lot of trade with you guys and back and forth. It's good for both of us. That's really what it is,
Absolutely. Dan, was there something you wanted to add on this? I thought you had something.
I agree. I think, I'm hopeful that you're right, Tony, that calmer heads will prevail and we will see pro-growth. But again, trying to just wade through the uncertainty of how do we get there and what is the actual policy? It's a different story.
Definitely. Following up on taking it down just one notch, earnings season's kicked off this week, and with some strong reports from the initial banks that have reported, Probably some of the best reports we've seen from the banks in a while. How do you guys feel about the earnings season for the companies that are for the companies coming up, or even specific sectors, as we see the reports from Q4 coming out now?
That's a tough question. I mean, I never really focus on quarter to quarter company earnings. Most of my investments are based on kind of trigger points. And I know I've brought up First Solar in the past or Eli Lilly in the past, where you have these capacity constrained companies that are bringing more capacity online. So demand is there. You just need more supply. And those will create trigger points for upside, hopefully, in both earnings and the stock. So quarter to quarter, you know, analysts are wrong, companies sandbag. I think overall, like the economy's been doing good. It should be relatively solid earnings.
Great point,
Yeah,
Dan. And
yeah,
I agree. I think most of us are long-term investors, and it shouldn't matter, but certainly earnings drive movements. And a lot of the banks had real nice movements after those reports. I look at Citi that was up 6%, and then I wonder, well, is it going to sit here now for a while? Because it usually doesn't move a whole lot. So, and it might even pull back a little bit. So, great point, Glenn. Any other thoughts about the earnings?
Well, this is just a theory based on the last 2 months of people seeing that if this uh, hopefully not situation happens with tariffs, that a lot of people have been stocking up on things. They've gone to Walmart,
interesting.
they went to Target, they bought some extra things for Christmas. They're going to buy some stuff, that they might think will be more expensive. So it might almost be like a little artificial blip it'll push it up a little bit higher for, say, companies like, I don't know, like Amazon or Visa, as they're doing the processing. They might actually do really well, but then in the middle of the year, this first quarter, people are going to be a lot more cautious with what they're spending money on. So the first or second quarter of this year might be tougher for them than it was this last quarter. Like their last quarter of last year will be great. So it'll kind of like shadow what's coming in the next 6 months. At least that's my
Yeah,
theory.
I think we see a lot of companies, project a lot lower for the first quarter because of that. It's definitely a seasonal thing. All right, well, moving on, you know, we have some, and I'm going to say, especially you, Glenn, some techie guys in the group.
Yeah.
And that's probably not even a word, but a little bit of slang there, but I just thought it was so appropriate. So I've got to ask about quantum computing because it's been in the news lately. And there's a handful of companies in quantum computing that have exploded like meme stocks recently. And then about a week or so ago, there was a lot of comments from some people, including Jensen Huang of NVIDIA, saying, "Oh, we're ways off from quantum computing," and a lot of these stocks, like there was at least five of them in the same day, crashed 40%.
Yeah.
Excuse me, 40%. And then in the last couple of days, we started seeing some bouncing back. So, how are you guys feeling? Any thoughts about quantum computing? Is it an interest? You guys been looking at any stocks in quantum computing?
For me, the only company would probably be, or maybe two companies working with it would be either Google and or IBM. The thing is, this stuff is so bleeding edge. There really are no products. It's more of a, it's really bizarre the way quantum mechanics works. But the idea is that with certain tasks, this computer can do in, say, 3 minutes what all the computers in the world would take 3 trillion years to do. But it's only in very, really specific areas. And so this is kind of like genetics. If somebody finds the cure for the C word, if somebody finds that, then it'll all take off. But right now, quantum computing is so bleeding edge, there's no product. It's just a very big what if for companies right now. And if you're going to bet in it, you're either going to bet on either Google or like even NVIDIA. We're going to work with massive data sets using AI, but quantum computing might come about, but we're way off from it doing anything from a product point of view, where people are just gonna, there's not a pet rock version of quantum computing right now where everybody needs to have it. you know?
Well, interesting. I love your viewpoints, Glenn. I love that you ended up talking about not the five companies that, were going crazy like meme stocks, but talking about IBM and Google. And it
Hmm.
makes me think of how many years ago that IBM came out with Watson, which was really like the first AI product, right?
Yep.
And yet they didn't really get a big benefit out of that. And now everything's about AI. So kind of interesting there. Dan, any thoughts about this?
I'm just listening to Glenn, but it is tough when you're investing in a company that's in the research phase, right? And I think that's where we're at. And this is one of the reasons I mostly stay away from kind of the pharmaceutical, trial. I mean, I've been tracking Editas Medicine for
Yeah.
3 or 4 years, and it's like the technology is amazing, but they don't have a product, and it's the stock price goes as they bleed cash, and
Yeah.
it's into penny stock territory, things like that. It's really difficult to make a bet in that space, and to think of yourself as a long-term investor in a company that is basically just eroding cash during the research phase.
It's true. And
No,
with CRISPR, CRISPR, like you say, it's a great technology.
Yep.
How do they make it work? How do you prevent mutations? There's all these other things, and it's a great idea. Some things work, but it's so bleeding edge. It could be 10 years before they actually have something that's really great. And I know, I mean, some of those companies it seemed like it's so close to actually creating something usable that you can actually use in the real world every day,
Yep.
but there's still a ways away from that. And quantum computing is even way more far away in the future than even just genetics, where they kind of have things that work, but it's a little weird. But this is a very big what if for computing technology.
Yeah.
interesting. Look forward to seeing how this advances and plays out in the future. So, if you had to buy one stock today, what would it be and why?
I came in here ready to talk about kind of an investment philosophy of a lot of value investors, where um, they'll find these companies where it's a heads I win, tails I don't lose much kind of idea.
Hmm.
PayPal was in this bucket about a year ago, and I thought that was a good buy. The one I'm looking at right now is Academy Sports, which is totally off the beaten path, the things we usually talk about here. But this is a company that's probably got just under 300 stores, mostly in the Southeast. They're really shareholder friendly. You can go look at their website. They'll talk about all their unit economics, how it takes 4 to 5 million to open a store. They're cash flow positive within a year. Their mature stores do 4 to 5 million in cash flow a year. So really good return on invested capital. They're going to open 20 stores next year. And we'll say like they produce 5 to 600 million in free cash flow a year, and 200 million goes to opening stores, 300 million goes to share buybacks. And so it's a company that's eating itself alive at a 8 PE. So I mean, it's an easy 10% return on share buybacks. Um, Easy mid-teens kind of earnings growth over the long term. They're facing headwinds now due to poor comps, but it's one of those things. It's an 8.5 PE. Um, Good cash flow yield. It's just one of those things that you're not going to lose a lot. You're not going to hit a home run, but it's a nice solid return without a lot of risk.
I like that, especially the 8 PE. I've heard Academy Sports mentioned over the past several years, and I haven't been following closely. I believe the ticker's ASO, if I'm
Yep,
correct.
that's correct.
And so I'm definitely going to take another look at that too myself. Um, Before I let you go, though, and get into Glenn's pick, you mentioned First Solar earlier, and First
Yeah.
Solar has had quite a run since you mentioned it, and then it pulled back down. How are you feeling about First Solar these days, Dan?
Again, it's a big part of their story is the uh, the Inflation Reduction Act, right? So they're getting this 17 cent per watt rebate on solar panels produced in the US, which is really close to the cost per watt of their production. So they're basically getting a rebate in the US on the cost of producing a solar panel on a per watt basis. So if that goes away, there's still a growth story, but it's not a giant growth story like it would be, right? Their economics are challenged, and now they're competing with cheaper
China.
panels from elsewhere, right?
Yeah.
So again, it's probably a $400 stock if they repeal the Inflation Reduction Act in say three years. It could be an $800 stock in 3 years if they leave it alone. So that's just, again, you can do the math on their earnings. That they're really good about sharing their financials and what it costs to produce a panel. And they have a backlog of 90 gigawatts or something crazy. There's demand for renewable energy from data center use. And that's sitting out there. And Glenn kind of talked about batteries earlier in the show. If you can get the batteries figured out with renewable energy, there could be a lot more upside there. But again, there's policy uncertainty around that company right now. And, I've pared back my position based on that.
Well, that was a great update off the cuff, because I just threw that out of the blue at you, Dan. So I appreciate that. But you did a great job with that answer. That was very informative for our listeners. So that was awesome. Glenn, what are you thinking about right now?
Again, like Dan talked about, there's a lot of uncertainty about how all of these, a lot of these companies are benefiting from certain parts of what the government does or the way the economy shifts. Like First Solar, if what China can do right now is that there's an actual arms race going on. It's been going on for 4 years with solar panels, and the goal is to reach 1,000 watts per panel. It went from 200, and they want to get to 1,000 watts, and right now they're hitting at about 800 watt per panel. So these numbers are changing the economics of fuel, basically. And if you the holy grail is to be able to put a battery into an airplane. If you can put a battery into an airplane, the whole fossil fuel market is going to shift at that point. There's just no doubting it. So anyway, that's solar. But for me, I think I would probably look into TSMC. They've done pretty amazing for the past year. They're up about 111%.
What was the ticker again there, Glenn?
TSMC, Taiwan Semiconductor.
Gotcha.
So they do have their fear that America is just going to mess with Taiwan because they're building here. But no, Taiwan is one of those trading partners where half the stuff we have is made in Taiwan, from G.I. Joes and Barbies to semiconductors. So we're not going to let them hang out there. The thing is, all the IP, all the intellectual property belongs to the U.S. or Western companies. So even if China did do something in 2027, which people think, TSMC in Taiwan, it won't make any difference. They're not going to win anything. But TSMC, their factory, the plant they're building in Arizona right now is up and running, and they're producing wafers and chips at about 4 nanometers. And basically, it's almost all going to Apple and like the government for their chips. So they're being successful. It's working. And, even Intel has their chip in Ohio, but their chip plant in Ohio. But TSMC is so far ahead right now with their tech that I don't know. They have they're running at 100% capacity, I know, in Taiwan, and I think they have 30% more demand than they can actually meet right now. That's a good problem to have when you have so much demand that you can't actually make chips fast enough. So
that's it. And you brought up a great point too, Glenn, because I think a lot of our listeners would think, as soon as you talked about Taiwan Semiconductor, well, what about the plants that are being built in America? But Taiwan Semiconductor is building a plant in America, so they're going to be producing here too. Yep. So that's critical. That's key. That's a great point, and they definitely should still have a long runway.
Glenn, do they have any capacity expansion plans? Do you know?
Well, that's the thing. It's these things are so massive. They take so long to build. So they do have the next generation that's being, I guess, planned and being prepared to be built. But one of the issues with these plants is they need so much water, they can't build them anywhere. I mean, why in Arizona? They're building it in the desert and they need more water, but I'm sure there's a lot of tax rebates and incentives and everything. But by 2028, so 3 years, they'll have the next generation, which is like 2 nanometers, which, with by 2029, I don't even know how to measurement. They call it an angstrom, basically down to like the single nanometer range. And that'll just, but that'll be available in the US, not just in Taiwan. And the fact that they can sell all of these, a lot of people were worried that if we cut off the Chinese from a semiconductor supply, there's going to be too much. Well, I don't think that really showed. That never really showed up. I think there's so much demand for chips from all these different companies that there's more than enough capacity to meet it, but they could still use more, right? It's a chicken or the egg thing with semiconductors. It's always like an ebb and a flow, and they hate to have so much capacity when they can't sell it versus. So they'd rather be up against the wall than have too much capacity.
Yeah.
Great information, Glenn. Appreciate that. And good follow-up question, Dan. I'm going to give you Sirius XM radio. This one is an interesting story because this has been traded through a tracking stock, but the company's totally spun off of the tracking stock and it's now its own company. And because of that, they incurred a big transaction cost recently. So the financials for the last quarter don't look good, but most of it was this charge they took. It's trading currently near its 52-week lows. They've signed some new talent that's supposed to bring them some new subscribers. Even though the last quarter, the revenue was down a little bit, their subscribers were up. They were cutting some pricing. So they have 33 million subscribers. It is, other than standard radio or streaming from your phone, and when you're in a car, it is the source. I listen to it daily when I'm in the car. It has a 32% EBITDA margin. So it's paying a 5% dividend. And I think this is a growth story with a 5% dividend. So Sirius XM, ticker SIRI, I think is a good one. Well,
Nice.
Are they being held up by Howard Stern? Are they still? Is that still his like the main, or is it more as? I think they got into like podcasts a lot more serious. They actually tried to.
Yeah, they've signed a lot of new talent. So I wouldn't say they're being held up by Howard. They actually own Pandora as well, which of course is like playing second fiddle to Spotify. But I see some upside in Pandora. So a lot of opportunity there.
Right.
Well, thank you, gentlemen. And I want to remind all our listeners that you can get more information about all the managers' portfolios, our house models, our performance at marketocracymasters.com. And you can pick up more information, links to our podcasts, links to any videotapes we have out on YouTube, and other information on investing at marketocracy.io. Thanks for listening, and we will talk to you again within the next month. And go Lions. Okay.